Hello and welcome to a look at defining beta with me, Andy Duncan, here at FinLingo.com. Beta is one of the most important Greek letters in all of finance. So what is it? Well, you'll often see it in one of two different places. The overall risk of what's called the market portfolio is said to have a beta of exactly 1. So what does that mean? Well, if we plot the return of the market portfolio against itself, by theoretical definition, we'll get an overall slope coefficient of 1. So here I've got the market on the x-axis and the market again on the y-axis. In this case, I'll pretend to be an American, you all, and define the market portfolio as being the S&P 500 index on the 500 largest US companies. If this index goes up by 10%, it plots on both axes as 10%. If the S&P 500 goes down by 10%, it also goes down by 10% again on both axes, and so on for every single possible market return. We then name the slope coefficient on the generated line as beta. At every single point on this line, the slope must be 1, again by definition. Now we're going to replace the market portfolio on the y-axis with a different higher risk portfolio. This might be an index on some banks or on some pharmaceutical companies. This time when the market goes up by 10%, the high risk portfolio itself goes up by 20%. And when the market goes down by 10%, the high risk portfolio goes down even lower to minus 20%. If this pattern holds for every single possible market return, we get an overall dy over dx of 2. So the beta risk of this high risk portfolio is itself 2. Notice we can get some really weird investments, such as this one on receivership companies. These might actually do well in a market recession, and then they might move against the market. This investment actually has a negative beta. Fortunately, this extreme pattern is usually very difficult to discover in anything like real life. However, you might still get asked to calculate such a weird thing in a CFA exam. Some more typical investments are what's called defensive stocks. These might include some utility company indexes or some supermarket company indexes. These defensive stocks are less risky than the market, so they have betas of less than 1. Let's say this particular defensive portfolio is really defensive. It has a calculated beta of just half. The other place we often see beta is on something called the capital asset pricing model security market line, or SML for short. Here, beta plots on the x-axis and the expected return of any portfolio investment plots on the y-axis. What we can see here is the standard return pattern on the security market line. But remember, the market always gets defined as having a beta of 1. Here we've got a risk-free return from something like a US Treasury bill, and let's say here it equals a measly 2%. And here we've got the expected market return, where beta is actually defined as equaling 1. Let's say its expected return value equals a satisfactory 10%. If a high-risk portfolio has a beta of 2, it plots here. Its expected return on this line will be 18%. We'll talk about why in another video on the capital asset pricing model, which you can access via the show notes. A low-risk defensive stock with a beta of half would plot here, and this has an expected return in this particular case of 6%. So it's really important whenever you analyze any financial investment to get hold of its beta value. Once you've got it, you can understand exactly how risky it is compared to the general market. You can also understand how much return you should expect whenever you invest in such a thing. In the CFA exam and other financial exams, you'll often get asked to calculate an investment's own particular beta. You'll get questions like this one on FinLingo. Hopefully, now that we've got beta defined, these questions will be easier to do. So how do you work out beta? Well, we'll also cover that on another follow-up video, which you can get to either in the show notes again or via YouTube's information button. Head on over now to FinLingo.com to get an infinite number of questions on how to calculate this important financial concept of beta, along with hundreds of other CFA question types. FinLingo. Speak finance fluently.